Let's pick up on the markets now, and the JSE starting off trading this morning deep in the red, and this is after yesterday's rout. The investors also jittery about the United States Federal Reserve hinting that it would not hesitate to raise interest rates just a week after leaving the lending rates unchanged. Well, to talk more about what is happening both in the global space but also local markets, we're joined by Phaswane Mphahlele, a senior portfolio manager at Makwe Fund Managers. Mr. Mphahlele, thank you very much for your time. Let's begin with what was not a good day for local markets yesterday, but talk to us about how the local bourse is faring against international trading floors.
Well, good morning, John. Markets are just are following the downward momentum we've seen from yesterday. We saw overnight the US traded very badly, followed on because of Asia did so, and we opened down in the rate down 0.8. And this follows the central bank comments ahead of it all. Mr. Powell, he reiterated in his speech that central banks are not going to be very quick to be stopping interest rate hikes. And therefore, they'll be continuing to look at further economic data and conditions on whether they should mitigate the risk of inflation or not. And this has just seen investors now worried whether would the Federal Reserve be willing to put another dent to the economy. And this saw just investors just moving to crowding the trade of the dollar. We see bond yields ticking higher. We saw the 2-year yield topping 5% yet again. And this is just a sense of telling us that bond investors believe that inflation might be a problem, guys. It might be a problem coming into next week's print. And further to that, another real risk indicator there within the bond yields that are telling us is that a U.S. government shutdown might be at hand. You see the 10-year bond yield is still sitting there at 4.6, ticking higher. And it's always just indicating that the investment sentiment is weak. And we see locally the Southern Rand is weaker. Now bond yields are also weaker as they jumped up as high as 2.5 basis points. So not a good market. I was looking at Brent bonds continue to support at $80 there. So not a very good morning for investors to close the week.
So let's focus the attention on the JSE for a moment, launching its carbon trading market. What is this all about? And as with everything in business, who's going to be making the money?
Well, I'll start off this way. Well, the carbon trading is a collaboration the JSE has done with the US-based firm, and it's a good initiative, guys. It's good because it allows us local participants to trade in carbon credits and renewable energy certificates. It's a good initiative in the sense that we are aligning with the global efforts of decarbonizing, and seeing South Africa is one of the top 15 in terms of carbon dioxide emitters. It will help them achieve some of their goals of 2030 and 2050 because this type of trading would allow them to attract investment. We know they need around about 700 billion rand for their just energy investment plan. So having this, it would be good. So overall, it's a good step we're going forward as South Africa along with the JSE and business. But to answer your question, JSE of top of the list will make money. The brokers will make money. The government will also make money by trading their surpluses. And companies that actually have surplus allowances will also make money. We're looking at financial institutions, of course, and project developers that are in this space. Those are the guys who should make the money.
Aha, very interesting indeed. All right, let's launch into company news now. Johann Rupert's luxury goods brand, Richmond, releasing its first, or should we say its half-year financial performance, which shows a 6% increase in sales. A good day in the office?
Well, they're looking at the results. You're not happy, I don't think you will hit the results, and along with shareholders. I mean, like when we look at the economic conditions they faced during the period, it's been tough. We're talking geopolitical instability. We're talking interest rates. We're talking inflation that harm the consumer's pocket, and he's looking out for his consumers. But the business got harmed more to do with the foreign exchange conditions. They were badly hurt. But outside that, they showed robust performance. I mean, like sales were up 12%, operating profit up 15%. And this is all thanks to the business having to be able to directly communicate with their clients, have a strong clientele locally, and also having to enhance the durability around their amazing products. I mean, just looking at the amazing products, the sales were just up by 10%, and the margins up 35%. And this is all thanks to the investments around having it manufactured well, distributed well, and having it marketed well. Because when we look at the overall sales outside America, we're seeing sales have been positive for the business within all the regions and channels, and with the Asia Pacific leading the charts. Meanwhile, when we look at the other products like your specialized watches, they saw sales down by 3%. And when we consider the fashion sales, they were currently stable. But at a group level, we're looking at operating profit that was slightly hit, and this goes down to those foreign exchange conditions that were negative towards them. We saw the dollar has been very strong in the second quarter, and that made a big impact. But their margins are still positive. We're seeing up 26%, and their profits from operations up 3% to 2.2 billion euros. And when we look at the balance sheet in actual fact, it remains healthy. 5.8 billion in cash position. That just gives them more opportunity to go into the market and find new opportunities. And I'm sitting there as an investor. I'm quite happy with that because the guys are very optimistic about soft landing in many of the regions they're working in, especially with China's growth having to lead the charge when the stimulus efforts start hitting the ground for the consumers.
Yeah.
So overall, I think the results are good.
Let's talk multi-choice. It's told shareholders that it expects a significant loss when the company releases its interim results next month. They are warning of a R1 billion drop in trading profit. That's not so good news. What's going on there?
Yeah, billion loss is a big number. They expect more losses, and so investors shouldn't be happy about this. Just looking at the core headline earnings per share, it's expected to be between 3 and 8% in terms of losses, and it's more having to do with something I think with more external factors. We were talking earlier about foreign exchange conditions being negative for certain companies. They also got negatively impacted by currency movement because of that stronger dollar, especially in Nigeria. They have to now absorb around 1.7 billion rand, and some of which are unrealized. Further losses you can account it to being impacted by having a big investment around the Showmax position, around about 500 billion that they bring towards Showmax in order to relaunch it in the next first quarter of 2024. And unfortunately, though, when you consider the fact that the guys have increased their local content to the market around by 60%, the gains, the trading profit today, when you look at the numbers, is not necessarily increasing. It's between 7 and 12%, and it's telling you how competitive this market is in terms of content creation.
Yeah. Let's conclude the conversation then with the latest on the troubled sugar producer, Tongaat Hewlett. They are releasing an update. In fact, they have released an update to the market. What are they saying?
Well, Tongaat Hewlett, the Tongaat Hewlett business rescue practitioners have come out and confirmed that Mr. Robert Netter's consortium, that is compiled of different players there, will buy the company's outstanding debt from the banks and bringing it closer to buying the company, and it will give them overall control of the vote in the upcoming business rescue plan. Although it's unclear to the market in terms of how much they'll be paying for that indebted company, around 8 billion rand. They're not clear if it will be discounted or what, but as it stands, banks are very pleased with what the deal is on the table, and they are willing to go ahead with it. But when we look at the good and bad, is that unfortunately for shareholders, they won't be receiving any value for their shares, considering the company has faced a lot of challenges since 2018. But on the good side is that we are happy to know that jobs will be, if things are done and dusted well, jobs will be saved, families will be saved, standard of living will be saved for people there. And if the company will implement the turnaround strategy and make money, start trying to make money out of this business.
Well, at least it ends on a positive note. Thank you very much for that markets update, Phaswane Mphahlele, a senior portfolio manager at Makwe Fund Managers.